Hello, guys. We're going to go ahead and get started. Today, we're going to talk a little bit about the, the market insights that we normally talk about. I'll go ahead and start by introducing myself. My name is Nadine Botter, and I'm filling in for Brad today. He's out on some calls, so I was just going to make it a little bit more lively by filling in for him. Zach is still here, so he's gonna be talking as well. But for anybody that is new, this isn't really an intro type of webinar. This is kind of going to dive into the newer things that we've added into SONAR for the past week, talk about some use cases, probably last for about 30 minutes. So Zach, if you want to start by telling us a little bit about what we're going to talk about.
Yeah, for sure. Thanks for filling in for Brad, Nadine. It's refreshing to have somebody else here. I'm joking. I love Brad. I'm just a little bitter. So we've added a few things in SONAR this week. We're actually kind of building onto a bigger release upcoming in the next few weeks. So we decided to hold some stuff back for just an extra week or two while we got that ready. But the big addition over the last week is our year-over-year change in the 6 big markets. So we have Atlanta, Chicago, Los Angeles, Philadelphia, and Dallas on our markets that we have this year-over-year change. And this is something that I think most people are pretty they've been asking for quite a bit. I know you're the one that gets on the sales calls and gets to talk to them all day. Have you had a lot of requests for the year-over-year?
Oh yeah, a lot of people will kind of look at it, on the main map, looking at a year view, but now you can kind of look at them next to each other. Makes it a lot easier, and it gives you like a percent change. So yes, this is something that's very useful and will definitely, help explain what we're looking at.
Yeah, no, I think it adds like a point of reference. I know whenever a lot of this data is pretty new. It's very fresh, so people don't know where their point of reference should be. Now we have something to kind of give you an easy way to measure that pretty fast. I've got outbound tender rejection index yearly change Atlanta pulled up because Atlanta is the single largest outbound market in the country. So it's a great place to start to see what the overall market's kind of doing. It kind of leads, like along with Chicago. I'll go ahead and pull up the outbound tender rejection index for Chicago. And you can see it's, down even further. I'm going to put that on an absolute instead of a relative. So these have dropped here significantly. There we go. And what has happened?
Having some technical difficulties.
Yeah, technical difficulties. I'll just leave Atlanta up for now, just to kind of illustrate. Oh, I put up Chicago itself. That's why. User error. Typical.
What is this, your first day?
It is my first day. So Chicago, O try Y, Chicago. Make sure you use the Y to get the right tender rejection value. There we go. So Chicago is down negative 13.34%, or I should say 1,334 basis points. That is the absolute change in percentage. Not necessarily it's down 13% in terms of value. So Chicago and Atlanta, both down. Pretty much all the markets are down year over year, which I find kind of interesting because volume is actually up year over year. One of the things we had added just recently, we actually just lapped kind of our year of having some of these indices out, is having data for a year. So you can see volume has gone up quite a bit in Atlanta. The tender rejections, if you recall, went down 10%. I think this is a pretty significant thing because there's this idea. I mean, one of the main reasons we have SONAR is to measure the capacity available in the market. Like how imbalanced is the market right now? And right now, I think the idea is that there is a lot of balance in the marketplace, even though it has kind of absorbed an extra, I believe this is like 20–30% more. I like illustrating the tools sometimes on here because a lot of people, for the newer users, they may not know that we have this whole series of tools available to kind of help you analyze data on the chart. I'm going to pull up one called Trendline, and it's kind of an easy way to quickly see, do some quick math on a chart. I know I used to work in Excel, so I like to have something that gave me a quick way to do math because I wasn't smart enough to do it in my head. So 24.93% increase in volume overall in the Atlanta market. I mean, that's a pretty big deal.
That is.
We've talked to several people that say, yeah, volume's still high, and this idea that the market's kind of coming down and softening. Well, it is softening, but it's softening off of record-breaking territory.
Right.
I know you were a broker not that long ago.
No, and I remember.
And you remember.
I remember. I did it for about 7 years, so I remember each year was something different. So, you know, this is definitely insightful information that can help you kind of understand the broader market and kind of help you, you know, realize that you're not the only one dealing with whatever you're dealing with on that day-to-day basis, and help you make better decisions so that you don't have to deal with all the issues that we all, I'm sure, face on a weekly, monthly basis.
Now, when you were out there, did everybody kind of have this idea that, and I'm going to put you kind of in the spotlight because this is your first week. So.
Yeah.
So did you ever have this kind of idea that you knew that the seasonal patterns of the market, things were going to kind of happen around this particular time?
Oh yeah, definitely.
Did anything change over the last year that made you think, oh, maybe I don't know?
Yes, exactly. Looking at, it depends, of course, on your customer base and how exposed you all are to the market. And I worked at a couple of different brokerages, so each one was exposed differently. And in my last job, definitely, we were exposed more during the summertime. So watching, you know, the December numbers, comparing December over December, I remember last December, we were making the most margin that we were over, you know, the next year. So if I was still in it today, it would be very interesting to compare what was going on last December to what goes on, you know, this December.
Yeah, the year-over-year stuff definitely makes a huge difference.
Yes.
To give you a point of reference, one of the big differences between this year and last year is the fact that the market itself was really confused.
Yes.
I think you saw a bunch of people kind of struggling to figure out how, you know, how to kind of wade through, you know, all the hurricanes and you know, the ELDs and all the chaos of the market. I think probably one of the best things you can do, like, even though year-over-year information is very useful in terms of saying, well, this is how it's different.
Yeah.
I think you also have to understand that every year is now different.
Yeah.
Like, just because, you know, Christmas trees happen out of the Pacific Northwest every year doesn't mean that it's going to have the exact same impact in the Pacific Northwest every year. And it doesn't always have the same, like, volume, doesn't always have the same, like, the carriers may be ready for it that particular year. You never know.
Yeah.
This year, it's kind of been one of those where I think they've not been able to figure it out. I'm kind of going to rehash one of our latest indexes that we did add. We have these regional tender rejection indexes, just to kind of, I know we presented these last week a little bit, but I kind of wanted to illustrate the seasonal volatility. You can see I've got the Pacific Northwest region pulled up here. And for those of you that don't know what the regions are and whatnot, go to the website, the SONAR website, and there'll be a list. Once you pull up the index reference guide, there'll be a list of the states that are involved in each region. We've kind of designed these off of where we feel, well, we didn't feel, there's no feelings involved, but there's where we've kind of analyzed and figured out that this is the freight patterns in these states move kind of in conjunction with each other. They're related somehow. They may not be totally correlated with every time tender rejections in Seattle go up, Portland goes up, although they kind of do. But Seattle's capacity has more of a direct impact on Portland's capacity.
Right.
And trucks kind of interact between those two cities, depending on what's going on. So the Pacific Northwest is what I have pulled up here. And you can see all throughout the summer, it kind of dies. There's really not a lot going on there. Nobody goes in to the Pacific Northwest with regularity, would you?
No, nobody does. I mean, I always had issues getting loads to go to.
Except for?
Well, during the winter time, but then
Why?
It was impossible to get them to come out.
Okay.
Like if you had outbound Seattle, you were hurting yourself. If you had inbound, it was great. You could, you know, get them to go for whatever you wanted them to go for.
Okay. I mean, it's illustrated right here. This is you can actually see that tender rejections this year are as high as they've been out of the Pacific Northwest. I think Christmas trees have had a big impact this year, along with, I think because of the tariffs, I think most of the questions I've had and from kind of a macro capacity type scenario is what are the tariffs doing kind of moving forward? And a lot of the produce that's harvested in the Northwest gets shipped to China. Like, I don't think a lot of people know that cherries are actually a big Chinese import
Yeah,
from the
I
Pacific
didn't know that.
Northwest. The Bing cherries up there, they're the sweetest cherries in all creation, apparently. But
Learn something new every day.
yeah, no, they had to go inland this year. They had to go this direction towards the east, not out west. So instead of hopping on a container ship, they hopped on a train or a truck and went this way. And the majority of the freight that comes out of the ports, you know, a lot of that does kind of hop on a train, except for the West Coast stuff.
Right.
That will get on a truck and move this direction just due to the nature of the freight. So I think that's why we're seeing the capacity in the Northwest be a little bit more or a little less available this year, even though, I mean, you go into the market, typically you want any reason you can to get out, which keeps the tender rejections low. And on that same note, I'm going to pull up our good old-fashioned OTRY-Y.LAX.
Yep.
So LA has kind of jumped up over the last, you know, in terms of year over year. LA is a pretty depressed market in the winter or after the holiday season.
Right, yeah.
It tends to kind of die off and then stay really quiet until produce season starts making it ramp up again. This one was, you know, you can still see that capacity in this market is still a lot more available than it was last year at this time. It's down it's down 7.86 percentage points. So Los Angeles this year was a lot more heated in terms of activity and volume, for sure, but it actually is, you know, everybody's been able to kind of manage it a little bit more effectively.
Yeah, it kind of looked like the trucks were already there when the freight was being.
They had a long lead up, because the ports kind of fed that volume for so long. You had this kind of surplus of volume available in the market. So everybody kind of figured it out. They had a heads up, and that's something you don't normally see in LA.
No,
because it takes. I mean, it takes a while to get a truck.
5 to 6 days to get there.
Yeah.
So.
And then you need a reason to go there.
Yeah.
Nobody's deadheading from Dallas to get to LA.
Definitely not.
Right. So yeah, there's you know, I love the use case for the year over year information that gives you a perspective, but at the same time, it's old news.
Right.
You know, like I can use it to kind of give a point of reference to see how this year's kind of been managed, but at the same time, I can't figure out, like, I don't need it this year.
Yeah.
You know, in terms of if you're a broker or a carrier or a shipper even, and you're looking at this kind of year over year information, it's great information to have to gain perspective, but I don't think it's not going to give you a lot of short-term predictive power.
Right.
It may give you kind of this seasonal use to say, look, we're in a down cycle compared to last year's deal. That's why we're seeing these volumes. I can now validate the fact that my revenue is a little bit softer, specifically in this lane or out of this region, but it's not going to give you this, like, what do I do today about it insight? Right. You know, it's a great one to see kind of a long range, like if you're trying to manage bid cycles and stuff, which I think is a big deal right now.
Yes, that's what I've heard a lot of people doing RFPs.
Yeah, and I kind of wanted to dig into how to use SONAR on the bid cycle process here next, after I kind of finished up with the LA and answering some of the port questions. Los Angeles to Dallas, you can see the rates kind of coming down.
Yeah.
You know, the market typically kind of heats up and spikes right before Thanksgiving, but then there's a secondary peak that's coming right before Christmas. And did you find that before, I'm going to put you on a spot again a little bit, just because, again, you're new and I have to break you in. So did you find that there was like a big push of volume prior to Christmas every year, or was there like just more activity? What was the story before Christmas?
It depends. I would say that probably, you know, what is today, the 12th?
Yeah,
so the past 2, maybe week and a half or so, you kind of see the customers starting to, you know, finally figuring out that they need to get whatever it is you're shipping out of their warehouses. So I used to haul a lot of beer, so we had a lot of spikes during the first 2 weeks of December, and then that week of Christmas, kind of, you know, Christmas falls on a Tuesday this year, so I guess next week you're going to see very high volumes coming out of any beer facility. Like, it was crazy. That was literally the main time that I would make all of my money, was during those times, and it was a lot of spot market, and it was great.
Yeah,
So,
yeah. Everybody needs the booze
yeah,
in time
so
for the Christmas.
it's funny to watch how beer, beer goes back and forth. But yeah, before I was shipping just beer, we shipped a lot of big retailers. So yes, you definitely see a big push. It's really right after Thanksgiving, and then kind of the week before Christmas, it dies off and not a lot going on. At least
Right.
that's how we felt. And it was a lot of drive-in that we shipped. So I don't know about the reefer side of things, but for
Right.
sure.
So yeah, I mean, there's the seasonality there is for real. So this Los Angeles to Dallas rate, one of the things that I've noticed is that you're going to have these different cycles within every year. They're going to be relatively consistent. You can see in June there's a bump, and then in winter, right
Yep.
before Christmas and around Thanksgiving, there's another bump. These are pretty regular cycles. If you're planning a bid out in any of these markets, we have the big markets. I'll go ahead and just pull them up so everybody can get a quick look. Go down here to the Van Freight Rate Index. Say that
That's
10
a
times
hard
fast.
one, yeah.
And here's the lanes that we offer. And for those of you that aren't familiar yet, I'm going to kind of rehash real quick. These are developed for the purpose of freight futures that are launching here in March. They represent about 20% of the total truckload volume in the country, but have an impact on 80% of the overall market capacity. But they have a great kind of side use in terms of being able to kind of, see some of these seasonal patterns in individual markets. I think a lot of people, it does not replace RateView by any means, but at the same time, if you're in SONAR and you're in a bid and you're trying to see, okay, what did this market do this year? How
Right.
deep was that ravine, once Christmas hit, and then how tall was that peak? It's a great point of reference to see just exactly how that lane behaved this year compared to last, because let's be honest, as a former pricing guy, I have to place more value on last year than I do the year before that or the one before that.
Definitely.
The near time value is what I'm going to be pricing off of, because that's the best information I have.
Mm-hmm.
But these long-term trends and patterns are how I'm going to price things. So for instance, I'm going to dive into a little bit more specifics. If you have a heavy outbound LA shipper,
right,
I'm going to use this LA to Dallas as kind of a benchmark lane, because that's, one of the larger over-the-road lanes outside of Phoenix, which is kind of a regional lane, depending on the freight that I'm pricing. I'm going to take that into account depending on the shipper who I'm going to ask to give me the volume by month or week or whatever it is, and they're going to give you what they're going to give you. But
mm-hmm.
At the same time, I'm going to look back at this and see, well, where's my soft time of year for this shipper? Where's the busy time of year? If it correlates or coincides exactly with this, I'm definitely going to add some percentage points to this. My margin of error needs to be higher, or your margins.
Yeah.
I always called it my margin of error, because you were not guaranteed that profit.
Right.
And that's why I call it the margin of errors, because you're essentially going to price things higher in volatile times. And if the shipper, for instance, has a big, shipping surge in July, I'm going to give them a little bit more, because I'm going to try to win the freight too.
Right.
I can't just obviously add 20% to all this and expect to win the freight.
Right.
You got to take and give where you can, but if, again, you're going to have your own data to kind of use as well. But that's the way I would look at it with SONAR data in general, the DAT freight index. But if I want to get a little bit more granular, and I have my trend line on, the middle of nothing, I'm probably going to go into the OTVI and just kind of give a quick look to any of these areas. And upcoming in the future, just to tease it a little bit, we're going to have lanes for OTVI. We're going to get a little bit better at making this a more targeted approach, because you can have LA to Phoenix have a different season than LA to Dallas. Exactly. and so forth. Yeah. So this is going to give some weight to the tender rejection index. But to continue on with the kind of the bid process, I'm looking for any kind of seasonality in LA that happened last year, where if I match up the volume with the current shipper package and it coincides with any of these peaks, I'm going to price that a little bit higher.
Exactly.
Less aggressively. Anytime that they're shipping out of March, February, which I think is pretty, irregular. But if, just to kind of give a quick use case, that's when I'm going to give them the discounts. This is how I'm going to, a lot of people will just take a bid package. And I used to do the same thing when I got busy. I would just tree the bid package and add 5%.
Yeah.
you're not going to win a lot of bids that way. And you're also not going to kind of maximize your profitability that way. It's not the right way to do it. If you really want to add some kind of depth to how you're going to, like if there's a specific customer that you're targeting and you really want to win, if you're an up and coming brokerage, you're trying to make your name known. Obviously the carriers have their processes, but this is going to give you a little bit more of an edge.
Yeah.
Because you're going to have a targeted approach. Some of these guys that are going out there and giving you, the 5-6% just blanket increases, which we've all done. You're going to have a quantifiable advantage over those people. So after I look at the tender volume, I'm going to go in and I'm actually going to look at the outbound tender rejection index, and I'm going to look for anything that kind of illustrates, because volume and tender rejections, as we illustrated earlier, they do not correlate the entire time.
Right.
Actually, I'm going to pull up a chart that illustrates that real quick, because I do have a lot of questions about how volume and tender rejections kind of line up. I'm going to go ahead and just do it for the USA, actually. CPI.USA and Untitled.USA. And I'm going to put it on relative. Again, I'm going to tease another little feature that's coming out. We're about to have dual y-axis coming up here in the near future, hopefully within the next few weeks, because the relative axis is great, but it does have limitations, specifically on where you start.
Right.
That can dramatically change how you view this data. So a dual y-axis really gives you a lot better visual tool to kind of see the data. And we'll let you know when that happens. So you can see that as I pulled up, tender volume, United States, and tender rejections. Tender rejections have come down 13%. Volume has remained absolutely flat in the last month and a half. So when volume does this and doesn't have any specific, imbalances, things like that, that's not necessarily going to mean, like everybody's going to figure out where the freight flows are happening. And that leads to lower tender rejections when you have stability. When you have volatility, even with lower volume, if all of the volume shifting all over the country, if it's in Seattle this week and it's in LA the next, one of the reasons you're seeing that Pacific Northwest increase in tender rejections is because LA has been so hot. A lot of those carriers tend to move, they aggregate where the freight is, and that's going to pull everybody out of the Northwest that may be hanging out on the West Coast normally. There's regional carriers that operate up there and up and down the I-5. Mm-hmm. If they have the opportunity to move long-haul freight going out of LA, that's going to pay a lot more.
Yeah.
So they're going to migrate down there, exposing that particular portion of the country, again, allowing the tender rejections to go up with not necessarily a huge amount of volume.
Yeah.
So there's that. So that's kind of my spiel for the week. Is there any specific issues or questions that you've heard out there over the last bit?
Yeah, I mean, we hit on it a little bit with that year over year. A lot of people, and also the RFPs. I talked to about 4 people over the past 2 days that are in the middle of doing their RFPs for next year, and they've always asked me, how do I use this? How do I use this? And then forecasting, of course. So, doing the year over year and using the DAT information will definitely help people make better decisions and kind of give you that competitive edge, like Zach said. Yeah. Everybody's looking for that.
Yeah, so I kind of want to show, after our internet comes back on, I kind of want to show this tree map. A lot of people don't understand when I say, like, this is the largest market in the country. What that means, how do I know that? I know some of the people that are on the webinar, they probably have already seen some of this, but since we started a new series, I kind of wanted to recap this because this is something that I still use. Because the larger the market is, the bigger the impact to the overall capacity. So I wanted to kind of pull up the outbound tender market share on the tree map just to illustrate exactly what how I know who's the biggest market and who's not. So what this is it's telling you who the biggest market is with the biggest rectangle as it goes from top left to bottom right Obviously, the smaller the rectangle, square, if I can talk, the smaller the market. Any kind of value where it goes red means that day over day, that value decreased, so they've lost market share. Green means that they've gained market share day over day. And you can see here with the little box that pops up, Harrisburg, Pennsylvania, for instance, increased 2.9% yesterday with an absolute value of 3.2 on their market share percentage. So when this isn't going to necessarily show you where all the volume, like if there's a big volume spike, it's going to show you relative volume. So whenever somebody's losing market share, somebody else has to gain it.
Right.
Now that means that they could either have, just not dropped as the rest of the market dropped, like remained flat. So if Atlanta had 5 loads yesterday and the total market loads were 10, the market dropped to 9 loads today, Atlanta stayed at 5, it's going to show an increase in market share. And whoever lost that 1 load is going to show a negative. So just to make that a little bit more clear. One of the things that I look at just about every day is who's gaining market share and who's losing market share, because that's telling me where the trucks are moving, where the freight is available in relation to each other. It's kind of, I kind of visualize it as trucks moving in and out of areas. So Atlanta essentially had the same amount of trucks yesterday versus today. Ontario got a few more coming into it because there's a little bit more freight. Even when you're right next door, Los Angeles is losing market share, Ontario is gaining it. But these are the big markets over here that I'm looking at first thing every day. And then I go and I look at their tender rejections to see if that volume is making any kind of significant changes to the capacity in the market. That's quite useful. And this is also useful on a chart, specifically for bid packages, if we can get the internet to work. So OTMS, for instance, and I'm going to still continue to pick on, actually, I'm going to pick on Dallas because I picked on LA enough. Market share in Dallas over the last several months has dropped significantly. This is where, when market share is up, that means that there is going to, the carriers are probably going to know that there is freight available in that market, especially when it's up over a period of time. Once it starts declining, this is when you can kind of tell this place is out of season. Yeah. Dallas, I've always thought, is like this place where there's always freight available, and it's just not the case. Like you're going to get periods where there is an oversupply of trucks in Dallas more often than you will get where there is an undersupply. It is just not a hot market. And I just, again, coming from the asset side, I just thought it's always there. It's always there. But
Dallas and Houston used to kick my butt.
Yeah. So see. Now you have a way to kind of see where those seasons are specifically every year. And they've actually kind of come up a little bit. And I think this is due to the whole LA port thing.
Yeah, probably.
Yeah, because a lot of that freight comes inland and there's a significant amount of DCs and warehouses in those in those spaces before they get distributed across the rest of the country. So that's our spiel for the week. Nadine, if you want to, got anything else to add or say?
I think that we've highlighted, yeah, of course. Thanks for having me. I think we've highlighted a lot of good information. Anybody who is interested, of course, in getting, a one-on-one demo, definitely reach out to us. We're excited about what we have going on, and we're always adding new things. So hopefully next week we'll have a whole bunch more interesting things to talk about.
We are going to have a decent release next week. So stay tuned for that. I'll talk more about that once we kind of finalize it next week. So be sure to tune in next week. I don't know if we're going to have more of these because Christmas is the following week, and I doubt we'll have. No. Yeah, we won't have a webinar the day after Christmas. But we will have one more big webinar next week to kind of go through some of the new stuff and also probably talk about what we expect to see in the first part of 2019. For SONAR, we have a lot of stuff on the table. Some of it may or may not get put into SONAR once we get sorting it all out. But yeah, a lot of big things, including some interesting user interface stuff that's coming out here in the next week or two. So be sure to tune in next week and we'll go through all that. We'll kind of open it up for any questions. We're hitting right at our time. So I'll go offline for just a second just to give people time if they have any questions, and then we'll be right back. All right, so we had a question about regional OTVIs. That will be, it is on the roadmap, but it's not going to be happening in the near future. It should be happening probably sometime in 2019, more than likely early part. I don't want to commit to a hard date yet because there's still some other things that we want to get implemented first, including the map functionality. We need to make sure that our regions and states and stuff like that are working as well, and that is a user interface situation that we're working on. So yeah, that's upcoming. But I guess that's it for this week. Thanks everybody for tuning in. Nadine, if you want to close us out, Brad style.
Yeah, everybody, thanks for having us, and I'm glad you guys listened in. If you guys have any questions, again, make sure you reach out, and I'd be happy to help you.
Good deal. Thanks, everyone.
Bye.